Hello, and welcome to the Real Estate Basics podcast, where first-time homebuyers feel right at home. We are powered by the Monzo Group and sponsored by My Home Pals. I'm your host, Norm, and this is my co-host, Quinton.
Hey, everyone.
Awesome. From Home Pals, by the way. Now, last episode, we talked about the home buying process and the 7 steps to purchasing a home. So we're going to start off today by talking about that first step, getting the pre-approval. Now,
Some would say the most important step,
I mean,
if you need a mortgage, if you're not paying cash.
right, first step on a long journey, right?
Yeah, exactly. Well, they say 1,000-foot journey starts with the first step.
Yeah.
First step. I'll take it. Most important ever. Not just kidding.
Yeah. Well, before we get into the pre-approval, I think what we need to talk about in a little bit more of a general sense is what a mortgage actually is. So can you tell us a little bit about that? What is a mortgage?
Right. No, that's a great question. And, quick funny story before I get into it. When I first got into, home mortgages, you go to interview your young kid, right? And they're like, do you know what a mortgage is? This must have been 15 years ago. And I said, I don't, but my mom has one and she hates it. Right. So they're like, wow, you're funny. You're a sales guy. 15 years later, I own a mortgage company, Home Pal Mortgage, and here we are. So what a mortgage really is it's a promise to repay, right? So when you go buy a home, let's say you're buying a $100,000 home. So you don't have to come up with a full $100,000. You'll put down 3 or 3.5%, and then the bank will put down 96 or 96.5 or 97%, right? So the bank puts down a portion, you put down a portion, and then you have a promise to repay the bank, right? Bank or mortgage company or mortgage broker, depending on what it is and who's servicing your loan, right? So how they do is they split that into 30 years of payment. So every month you make a payment, right, for 30 years, or you can get a 20-year, 25-year. But for this example, we'll use 30 years. And it's amortized, right? So you're going to pay some interest because you're borrowing that money, and they got to make their money back on it. Does that make sense?
Yeah, so it's kind of like a car note, right?
Pretty close to a car
Similar.
note. Very similar, yeah.
Just, I think, a little bit more detailed on some of the vetting. We're going to talk about that in a second,
Yeah, I got about some stuff.
But yeah, so definitely, if you're working with an agent, a lot of agents are going to ask you if you have the pre-approval letter already. If you do, great. If not, you got to find a lender who's going to help you out. And I recommend mortgage brokers. So there's a difference, right? There's lenders and there's brokers. Lenders have a set of programs that they're allowed to use for you. And what a broker is somebody who shops all of those lenders to find you the best deal that fits your current situation. So what First State Bank might have would be different than, let's say, Lake Union Credit, whatever credit union you can name.
I mean, we got a lot of the Lake unions around here. Or
Credit Union One, whatever it might be.
Or Rocket Mortgage or Loan Depot. I mean, there's 1,000 mortgage companies.
Yeah. But what's nice about using a broker is they take that stress of you having to call all these places, find out what their programs are. Guys like Quinton, they're going to go through and find the best program for you. They're going to find the best interest rate, what you're eligible for, potentially down payment assistance even. These are all things that are going to be an advantage to you. So I highly, highly recommend that you use a mortgage broker when you're first starting to get that pre-approval letter.
Yeah, I mean, you really want to just see what you're eligible for, right? Because what one mortgage company might have, another mortgage company might not have, so on and so forth, right? Not every mortgage company offers down payment assistance. Not every mortgage company has low rates. It really just depends on their clientele, right? So what I do is, as a mortgage broker, owner of Home Pal Mortgage, I take your scenario, right? And I say, Andy America is looking to buy a home, right? And Andy America needs down payment assistance. Andy America's got great credit. It's been on unemployment. Who's going to give them the best? And I go 1, 2, 3, 4. Okay, this person has this, but no down payment assistance. This person has low rates plus down payment assistance. This is the best fit for Andy's loan, right? So then we take it there, and we really facilitate the whole process, right? So you're getting a professional from start to finish. Now, is that to say that other mortgage companies are bad? No. I mean, there's a lot of amazing companies out there, right? But you got to go with and who, your realtor's comfortable with and who you're comfortable with and really who's going to get you the best deal, I guess would be the best way to say it, right?
Right. Well, speaking of comfort, right? So we're going to talk about this a little bit more in the next episode, but I want to touch on it now.
Cool.
In that Find Your Agent episode. But really what I want to talk about is having your real estate agent connected in some way with your lender, your broker. So in my case, I'm going to use myself as an example. Quinton works in my office. a couple days a week.
It's a little bit easier.
It's a little bit easier when I can look over my shoulder and say, hey, Q, what's going on with Joe Schmo's file here? We need to get this to closing. And I know, I've built a relationship with Quinton where I know that he'll come in and do whatever he can to make that closing happen. He picks up calls during the night, on the weekends. That's what you're looking for out of a lender, because real estate happens outside of normal business hours, so you have to make sure whoever you're using as your broker or your lender, they're going to be available to you at any time. Now, if you call them at 1 o'clock in the morning, I'm not sure he's going to pick up.
No, I'm going to let that one go to voicemail. But
yeah, he'll get back with you the next morning. But you get what I'm saying.
You did bring up a really good point about real estate being a 24/7 business, right? Because when you're putting an offer on a house, right, and maybe you didn't get that offer in by 7 p.m., or the deadline that night of, and your offer is not considered, you might not get that house you were looking for, right? So you always want to be prepared, right? You always want to have your pre-approval. You always want to be lockstep with your realtor, right? So they know, and you don't miss out on a house. Being in the industry, we actually missed out on a house, right? Because the offer wasn't written to exactly where we were, willing to go, right?
Right.
And we still talk about it to this day. So, hindsight's 20/20, but pre-approvals really help that. So,
yeah, and again, having that relationship between the agent and the lender is huge. It just makes it, for lack of a better word, it puts you at an advantage through the process, right? When you're going through and you're talking about, okay, interest rates, prices, weekly payments, having all that information communicated back and forth through the agent and the broker in real time and quickly, it will help you get your home, and especially in a competitive market.
Well, we don't have to wait 8 to 11 business hours for a response?
Not with you anyway.
No, we don't do business like that. We definitely don't. But having a pre-approval is amazing. Working with a mortgage broker is great. Now, go with somebody that has really good reviews as well. Like, do your due diligence, I always say.
Of course, yeah, of course. Know who you're working with.
Right.
Yeah.
And if you don't know how to vet people, always go on Zillow, read the reviews. Go on Google, read the reviews. Because that's really important, right? You can't pay for Google reviews. You can't pay for Zillow reviews. So it's always a good thing.
Right. And we'll keep in mind, too, you look at the amount of transactions somebody does. That gives you also a good bearing. If you know that Quinton has done 10 transactions in a month, he's on top of it. He's getting his clients to the closing table. Right. That shouldn't be your only deciding factor. Look at those reviews. Call them. Talk with them. Have a conversation. See if you mesh well with the person that you're looking to work with.
Yeah, because he's going to be around for 30 to 60 days, or she. And you want to make sure you have a good conversation and you actually enjoy speaking with them. It's always that nice thing, right?
Yeah.
It's not this stuffy 1990s going to a bank and bring your stuff and hope and pray for a loan. It's not like that anymore. Like, it's fun it's not exactly fun, but it's a lot more fun than it used to be to get a mortgage. It's easy. Most of it's digital and or email and or phone. And then at closing, it's like a little party. I mean, it's kind of fun,
Right.
Exactly. I think it's fun, but
exactly.
Some people think I'm weird. Look at me, though.
Well, the party's at closing.
The party's definitely at closing. Champagne's at closing.
Right. So tell me a little bit more. So somebody's chosen to work with you as their lender. So tell me a little bit more about what goes into the pre-approval process. What does somebody need to bring to you to get that pre-approval letter?
No, that's a great question. So, when we start the pre-approval process, we usually, number one, are always going to start with a credit profile, right? So your credit profile is going to be made up of your 3 credit scores. You have an Experian, an Equifax, and a TransUnion credit score. And then we get to use the middle one. So let's say you got an 800, a 700, and a 600. The credit score for it is going to be a 700 credit score, right? And that's going to be the credit decision is made. You're going to want to bring or just know like how much you get paid per hour, okay? How long you've been at your current employer, if you're full-time or part-time. I have a lot of people that say, I think I'm full-time, and like, well, how many hours do you work? And it's 26. So, well, full-time's 32 at least, right? So there's going to be different standards for different programs. We could look at some W-2s, but, depending on where that credit score comes in and where your income comes in, we're going to qualify you for different programs. So we got FHA for, Federal Housing Administration, more for, first-time home buyers or people with not that much credit experience yet.
Sure.
We got VA, our Veterans Administration, for obviously people that have served. It's an amazing, amazing program. We have conventional loans, right, for people with a little bit higher credit score, a little bit more employment history, a little bit more down payment if they want. And then, of course, we're going to qualify you for as many down payment assistance programs that we can, right? Especially if you don't have to pay them back, right?
Free money's good money.
Free money is good money. But, that's going to be specific upon people, right? Some people are eligible, some people aren't. It could be income oriented. It could be credit oriented. It could be even area oriented.
I was going to say, don't you have a new program right now that's based on where they're currently living?
Right, yeah, where if you're currently living in some areas, you get up to $5,250 if you're a qualified buyer, right? To go use as down payment. We have some that are up to $10,000 if you make under a certain amount per year and you're looking to buy in certain areas, and these are just fantastic programs.
And these are different than MSHDA, which I want to touch on a little bit here.
Yeah, so these are totally different than MSHDA. They never have to be paid back. Right. These are actual just like grants given by both Fannie Mae and Freddie Mac in the Detroit area. There's only 4 places in the U.S. are being given right now: Baltimore, Detroit, Philadelphia, and there's one more, but it always escapes us. But for us, it doesn't matter. It's Detroit, right? Detroit and the surrounding areas. Now, it's not in Detroit. It is in Detroit, but it's in the surrounding areas as well. So it kind of works out. But those are really cool. And then MSHDA is actually a really good program as well.
It is, but you want to make sure that you understand the MSHDA program.
Yes, right? There's some very odd guidelines. Like if anyone's over 18 years of age in your home, they have to qualify on the MSHDA loan, which then does your income limit, which then does, and it's a great program. I'm extremely happy that it's offered in the state of Michigan. If there's a different program you can qualify for, though, if you fall outside of those parameters, any program's a good program.
Yeah, well, whatever can get you to the closing table. That's the bottom line. If MSHDA can do that, then we recommend going with that program.
Oh, yeah.
But the misnomer that I see a lot, and I've helped a couple people make purchases with the MSHDA program this year, the misnomer is that you're getting $10,000 to close, and that's it. Well, don't forget that $10,000 comes due when you sell your house.
Yep.
You got to pay it back.
Yeah.
It's not free. It's not down payment assistance. It's not a grant. Now, if you need that to close, great. Let's do it. Right? And you're going to stay in that house and build that equity over time. It's not going to be an issue for
I don't think you can make payments on it too, can you?
No, it comes due when you sell the house. So you got to pay it back.
Which, has not been an issue
so far.
Historically.
Yeah, we haven't had
because when homes are going up between 5 and 10% a year, right? Historically, but average it should be going up about 3% per year.
Right.
Right. That's a healthy growth where inflation's being kind of curbed, right? So that hasn't been an issue. You can just pay off your MSHDA. Again, it's an absolutely fantastic program. But if they're giving free money away, I'm going to opt out for the free money.
Yeah, absolutely.
Free money all day.
Yeah. Well,
I love it.
Let's go into those programs a little bit more. So we talked about MSHDA. Let's talk about FHA. So FHA is a great program for all of our first-time home buyers out there.
Oh, yeah.
We have a lot of things going on with it, though, to get you to qualify. So the main thing being credit score, right?
Yeah, so the FHA, you can actually do purchases. Most lenders are going to want to keep it 580 credit score and above, right? Some, depending on the lender. That's why you go with a mortgage broker. I've closed home loans, for people with a 533 credit score because everything was clean except their credit score. Clean meaning they had good employment, they had money in the bank for down payment. So, they definitely can stretch, but for, all intents and purposes, we want to, see about a 580 anywhere to about a 660 is kind of where I usually put the gamut for FHA on. Okay. It's a 3.5% down program. All right. And you can get a gift for that 3.5%. So if you got a family member, cousin, uncle,
yeah,
exactly. So you can put that with the money you have saved up, and that's your 3.5%. It also, we can get, and this was a word of the past, seller concessions, which is a little credit when you're buying a house that the seller's going to give you to go ahead and cover some of them closing costs. Yep. Right? So you couple that with the gift money. We're piecing it together. We're making homeowners out of people. That's what we do here.
Yeah, and more so with the FHA, it helps us dispel this myth of the 20% down. Right? So with FHA, you only need 3.5% down. You don't have to save up $20,000 to get your house.
I tell everybody, don't put 20% down.
No, keep that money in your pocket, make it work for you a different way. With FHA, though, you have the option of doing that, right? And with FHA, just like I said before, it's a great first-time homebuyer program. It helps you get into the house, get your footing in the housing market, start your investment on a good note, keep that down payment minimal. Typically, you get a pretty good interest rate with that as well.
Yeah, interest rate's really good. Now, here's the thing with the FHA. You want to use it to buy the home, but then you eventually want to refinance and get into a conventional loan because that's going to be a better loan for you long term, right? The FHA is there to access the housing market, right? It's got a little bit more lenient guidelines on both credit and debt to income, right? But it comes with a private mortgage insurance that's on for life, whereas conventional, that private mortgage insurance will fall off once you have enough equity in your house. So, like I said, use the FHA as a tool, and then get into conventional later down the road. But just speak to a lender, and we'll get you on a plan and a path. So, don't worry about that for now.
PMI, private mortgage insurance. Okay, just so everybody knows what that is the lender is charging you $150, depends on the loan, right?
Yeah, it depends on the loan amount. And basically what it does is it covers the lender for taking a little bit more risk by lending to you because you put just a little bit less down, right? But it's a charge that you pay monthly, and it's in your mortgage payment. You don't have to pay it all up front or anything like that. It's a monthly payment or incremental payment in your mortgage payment, and it won't go away until you get out of the FHA. So use the FHA. Get your credit up, get everything looking great, then get into conventional. But the FHA is just an amazing program to get into the home, right?
Exactly.
Get the home first, worry about the rest later. That's what I say.
Right. Now, VA. VA is a little bit different program than FHA, both government programs.
Yeah.
But VA, you have to put nothing down, right?
Right. It's 100% financing. So with a lot of my veterans, right, you could be any branch of the military, you could be Reserves, National Guard, as long as you have enough points. But it's 100% financing. So if you're buying a $100,000 house, you can finance $100,000. So the only thing that you'd be responsible to bring to closing would be, if you had some closing cost or your new escrow account. That's it, right? And sometimes, lenders will help you out with that, and, you can get seller concessions as well, up to 4%. You can actually finance, 100%. So if you have a $100,000 house, right, you can finance $100,000, and then, the only thing that the veteran would be responsible for would be the closing cost, right, if there's any, or sometimes the lender can actually help with that, and the new escrow account. So, they have taxes and insurance paid with their mortgage payment. So they're coming with extremely small amounts out of pocket. But again, this is a service offered by the Veterans Administration because of them serving our country. So I think it's a beautiful thing.
Oh, yeah. And days are gone. 2 years ago, these programs, FHA and VA, were frowned upon by sellers because you do need some extra requirements from the seller side, a special appraisal, things like that. It's different now. Right. Sellers are way more willing to take these offers, especially if they're at market value and they're good offers. And it helps you with negotiating because you save money out of your pocket.
100%. I mean, to kind of dive into what the VA and FHA requirements are and why people are a little bit more lenient, right? A little bit more strict. I apologize. The home has to have certain things, like no peeling paint, or, it has to be updated in a certain way to adhere to these guidelines. So, with conventional, it's a little bit more lenient. And that's why over the last 2 years, they looked at it and said, oh, we may not want FHA or VA, but now it's more of a buyer's market than anything.
Different.
Right. They'll take anything they can get. It's amazing for our buyers out there.
Yeah.
Especially our first-time home buyers.
Exactly. And that is making it easier for us to find you a home. Even though these interest rates are higher, we are getting all on the back end with the price, negotiating, concessions. These all make up that difference. Yeah, you're paying a little higher on your interest rate, but you're not overpaying for your house anymore, and you're even saving at the closing table. So just keep that in mind on your home searches. Know your loan program.
Right.
When you get pre-approved, it'll tell you right on the pre-approval letter. Talk with your lender about it. Go through the details. They should even be able to give you an estimated payment based on the property that you're interested in. And they'll factor in the taxes, the insurance, the PMI if you have it, and they'll go from there. So just to recap, for the pre-approval letter, what you're really looking for to get that letter for Quinton to issue you something is you need the credit score information.
Yep.
You need the work history, and then you need the debt to income requirements. See how important Quinton is? He's got a phone call right now.
Hey, that's a good thing. We're always helping.
We like being busy. We like being busy.
Yep. So
Yes.
we're going to go ahead and pull up the credit score, right? We're going to need the income, right? You got to be on a job for so long. We always look at the 2-year work history, right? We always want a 2-year work history. That's kind of how we fill out our 1003, which is our application.
Yeah.
Right. So if you've been at one job for 1 month, but I can still go back a full 2 years and say, look, they have a good job history, so on and so forth, we can still get you pre-approved. There's no like, you have to be on a job for so long if you're just a hourly or salary worker, right?
Right.
Now, there's different things for commission, but we won't go that deep into this, right? So, and then we'll look at, how much money you have in the bank and kind of, we help you fit into the loan program.
Right. And like you said, like we said, you're shopping it around.
Right.
You're finding the right program for your buyer.
We always want the best for them.
Right. That's the bottom line. As your agent, as your lender, we want to make the best deal possible for you. Keep the money in your pocket. Try to keep your payments as low as possible. That's our job. That's what we do.
100%.
Right. So let's talk about the current interest rate because that's a hot topic right now.
It's a very hot topic. Right now it is probably, I would say, 1.25 points lower than it has been, right?
That's great.
They topped out at 7, right? Just north of 7%, which was insane because we had never seen anything like that in the last probably 12, 13 years. So it was crazy to us, not crazy to the, history of mortgage rates. But now they're, starting to come down a little bit. They're in the mid to high 5s with mortgage brokers. Now, if you go to a bank or something, they could still be north of 6. 6.5. I don't know. Always got to shop, or we'll shop for you. It's just easier.
Right.
But yeah, so rates are coming down, and people are getting excited, right? So we're thinking that spring 2023, there's going to be a pretty big buying frenzy, right? Where people kind of got pushed to the sidelines, right? Because they're like, oh, these interest rates are higher than I'm used to. I was used to artificially lower interest rates, so I'm going to wait. And then they waited, and then now interest rates come down a little bit, and I feel like there's going to be a wave of people that go back, right?
Right.
So I'm telling people not to wait.
Yeah.
Get ahead of the curve.
Because you cannot time the market.
Right.
We have an idea of what's going to happen. We think we know what's going to happen, but nobody has that magical crystal ball to tell us what's going to happen. If interest rates drop and you're great, fantastic, we'll help you buy the house.
Yeah,
but you
refinance.
also have to be prepared that the interest rate may not drop.
Right.
And it may stabilize. So when
Be
you're
comfortable with the payment.
right, so you need to really make sure you're not trying to time the market. You're trying to time your purchase. Is it the right time for you? Do the payments make sense? That's really what you need to look at, because I can't tell you how many sellers and buyers I had last year. Well, I'm going to wait till the market changes. Well, we don't know. I've been in this industry for 5 years now, and I couldn't tell you what the market is going to be next year versus this year. Like I said, we have an idea,
Right.
a pretty good idea with an educated guess on what's going to happen. But if you sit and wait and wait and wait, you're never going to buy your house.
I told, just about everyone I know that they should buy a house when rates were low. I told them they should all refinance because rates are going to go back up. And I kind of felt like Chicken Little, like running around. I was like, rates are going to go back up. And people were looking at me like I had like 2 heads.
Yeah.
And then rates went back up. And I'm not the guy that will say, hey, remember when I told you?
Told you so.
Well, I'm not that guy. But if you're listening to this podcast, I did tell you. I just want everyone to know. I'm just kidding. But no, rates went up a little bit. And they're not crazy high. Historically, these are
low.
amazing rates.
Yeah.
Right? And if they do happen to go back down, you can refinance.
Great.
It's easy.
Yeah.
Call me.
It is easy. So again, don't try to time the market. Try to time what you're doing and make it comfortable for you. Time your purchase, not the market.
Right.
There's always good deals to be found, whether it's a seller's market or a buyer's market. That's why you hire an agent. That's why you use a lender to go through the process with you. So I think we went through pre-approvals pretty thoroughly here. Now, if anybody has any further questions about this, please drop a comment. We'd be more than happy to answer them for you, put them in the next podcast. But next episode, we're going to be talking about finding your agent, and I have got our next guest. It is going to be Eric Monzo. He's actually the broker of the Monzo Group. Again, they're our sponsor.
Right.
But he has, I mean, how much
wealth of
real estate
knowledge.
experience? I mean, it's unreal. So he is part of the brokerage, the number one brokerage in the state of Michigan in closed home transactions. He does
Not going to want to miss this one.
No, he does investment properties. He does residential purchases, and he's built a business from the ground up to be one of the top real estate brokers in the state of Michigan. I think number 2 in the country with Keller Williams. We're still waiting on numbers from last year.
Little shakeout. It should be. I mean, whether it's 1 or 2, it's still amazing.
Yeah, I mean, unbeatable. I mean, in the country, number 2 in the country in closed homes transactions. So he's going to come on and he's going to talk about what you need to look for in an agent, and we're going to dive in, all 3 of us, and we're going to have a great conversation. Don't want to miss that one. Also, don't forget, we are going to be doing our neighborhood snapshot. That's coming out on Wednesday. We are going to feature Quinton Township on our next one. So if you have any suggestions for businesses that you'd like to highlight, we'll get you a gift card and a little giveaway, and we'll talk about that a little bit more on the snapshot. Now, Quinton, before we go, was there anything else that you wanted to add?
Get ready. Get your pre-approvals. Get ready. Be before the wave of people, right? There's nothing like finding your dream home, telling your agent, Norm, that, hey, I'm ready to make an offer. My wife and I are ready to make this our home. And then you're going against 5 pre-approvals, right? Or 5 different offers.
And you don't have it.
Right.
It's tough.
So
it's tough.
just get out there. Start looking now, right? Call right now. It's not hard to get pre-approved. You have a quick, I would say probably a 4 to 6 minute conversation. You look at some pay stubs. You verify that you can pay the loan back. A lot of you guys, out there are already paying more in rent than your mortgage would be.
Oh, it's crazy. I've talked to so many of my friends and family and like, hey, you're paying $1,500 in rent. You could own your own home, build your own equity.
Right.
It's not that hard. And
someone's mortgage is getting paid. It's just the landlord's.
Not yours.
Right. Not yours.
Not yours. You're paying the landlord, and
and
they're happy about it because they're making bank right now because rent rates have shot up.
They have not declined since 2012.
Wow. See, stat. I didn't know that.
That's a 11-year incline in rental rates, and it's going to continue to go up. I mean, if you look around, you'll see apartment complexes being built everywhere. Why? They're making money. Why wouldn't they?
Yeah.
So anyway, how I'll finish it is get your pre-approval. Talk to someone. Reach out to Norm. Reach out to myself. We'd love to work with you. And of course, thanks for listening. And we're excited to hear about Quinton Township on Wednesday.
Awesome. All right, guys. Again, if you have any questions or concerns, leave it in the comment. You can also feel free to call me, 248-805-2706. Love to talk with you in person. Love to get you connected with Quinton and make your dreams happen.
Let's do it. Thanks, guys.